we decided to downgrade Singapore one notch to an underweight. And I think the challenge we face is that if you look at the constitution of the stock market, which is MSCI Singapore, or let's say STI, it's very heavily dominated towards banks and property. And given what we are seeing from the impact of COVID pandemic, I suspect these two sectors could remain under pressure. So while I think there are quite a few positive, long-term positives for Singapore economy, but I think as far as the stocks are concerned, or the stocks which go into the indices, I think they could remain under pressure. So I don't suspect the Singapore stock markets will kind of outperform Asia ex Japan.
Chetan, Rosanna joining from the studio here, and I want to ask you how investors should be diversifying their portfolios to hedge against any possible inflationary risk in the markets.
Yes, that's a very interesting point. So one of the things we highlighted on a recent outlook is that one of the attractions of equities is that if investors believe there's going to be some mild inflation down the line, then equities are your natural hedge, because equities give, the earnings are basically inflation hedged. If prices go up, you would expect earnings to also go up. So, I think if there's mild inflation, I don't think so you really need to change your strategy a lot. But let's say there's, pretty high inflation and sustained inflation, then of course, I think there is a case to be made to shift your allocation towards sectors or companies where the companies have pricing power. In other words, if they see input prices going up, they can pass those prices to the consumers. And typically in the past, I think usually commodities is one sector which generally proves to be an inflation hedge. I mean, this time around, it's a bit tricky because commodity demand it has other dynamics at play, whether it's related to COVID or whether it's related to US, China. But I would say, generally speaking, mild inflation is positive for equities relative to bonds.